Meantime, let's get to Meta. Shares are surging after the company posted a top and a bottom line beat. The conference call kicked off at the top of the hour. Julia Borson's got the details. Hey, Julia.
That's right. Mark Zuckerberg kicking off the call just moments ago, saying that the company is well positioned to navigate macroeconomic uncertainty and that the major theme for Meta is how AI is transforming everything they do. That's why he says they're increasing their investments in AI to pursue 5 major opportunities: improved ads, more engaging experiences, business messaging, Meta AI, and AI devices. Now, to fund that, Meta is increasing its fiscal 2025 capex to a range of $64 billion to $72 billion, up from a prior outlook of $60 to $65 billion, saying, quote, "This updated outlook reflects additional data center investments to support our artificial intelligence efforts, as well as an increase in the expected cost of infrastructure hardware." Now, in terms of Meta's core business, 41% margins far exceeded the 37% street account estimate, and that was driven in part by a 10% increase in ad prices from a year ago. The call is ongoing. We're going to be listening closely for any indication from Zuckerberg about economic uncertainty impacting ads, and particularly what they're expecting out of China. Back over to you, Melissa.
All right, Julia, thank you. Julia Borston. Karen, a lot to like here.
A lot to like, yeah. I mean, they beat on so many metrics. That operating income, that was a really big beat. Julia touched on the 10% growth in ads. If you want to nitpick at something, it would be the 5% ad growth, where the street was expecting a little bit higher than that. The capex actually for this quarter was a little bit down versus consensus, but we think it'll be up. You know, I'm always afraid to get too excited because they have that call starting just a few minutes ago. Sometimes they drop a bomb that we're not really expecting. But there was really a lot to like here. And I think that the stock had sold off so much since the last quarter that the risk reward was pretty compelling going in. I'm actually surprised it's not a little bit higher.
Does the raise in the capex midpoint range
That's fine. I'll take it.
give you some, ability to let go of that AI spending is going to be down?
Not yet. And
Okay.
here, this is going to surprise you. I have a cynical take about this.
Silver linings guy.
No. Yesterday, Trump saying a hostile and political act to Amazon. All of these companies that we're talking about are in the sights of regulators. We've been hearing about Google and the potential for remedies and the like. And so when I think about this and I think about commentary, I don't think for a second this is lost on these CEOs. All these CEOs who rushed down to Mar-a-Lago and gave money personally and from their companies to the inauguration. So, again, you get a shot across the bow like that yesterday, and you see a company like Amazon turn about face like that, it's going to raise the antennas of Zuckerberg and of Satya and some of these other folks.
Volatility in this name is unbelievable. This was north of $700. I think it was a $480 stock a couple weeks ago. You see where it's trading now. I'm with Karen on this. I mean, this quarter, theoretically, given the move that it's had up and down, I think it should be higher than this. Now, we'll see. You know, maybe it's just early. People get their footing. But this quarter suggests it should be doing better than it's doing.
Same theme. They're working on a proprietary AI training chip that they're doing it with Taiwan Semi. They're not doing with NVIDIA. Last year, they made up 13% of NVIDIA's revenue. So if there's any pullback, whether it's incremental or exponential, it's going to affect NVIDIA. That's 2 companies out of the 4 that make up all of their revenue.